This is Alan Bush with the Daily Financial Forecast for Tuesday, February 23rd. Starting out with the stock index futures, we are seeing some pressure developing. I was just on the trading floor a little bit ago, and some of the traders down there are concerned that the consumer confidence report did come in weaker than expected, in fact quite a bit weaker than anticipated, so that's putting some pressure on futures more recently. Also, there was some weakness in the overnight trade. This linked to weaker Chinese equity markets, which fell due to Chinese monetary authorities allowing the Chinese yuan to come under some downside pressure. Also, we did have, though, a housing report that did come a bit better than anticipated, so that's somewhat supportive. But overall, the consumer confidence numbers on the weak side, and that was, I would have to say, the dominant influence, taking indices lower, at least for today. Longer term, though, we do feel that interest rates around the world are likely to be very low, and this is a trend that I think will continue for quite some time. Even the Fed, who has been very hawkish, is likely to back away from their hawkish rhetoric. So a low interest rate environment, I believe, will be the catalyst that takes stock index futures higher from current levels longer term. Moving over to the currencies, the dollar index advancing as interest rate differentials remain favorable to the greenback. Also, we are seeing some pressure in the euro currency with some weak economic numbers in the Eurozone, and the British pound also under some pressure as the probabilities of a UK exit from the European Union appear to increase, although the odds are still for the UK to stay in the European Union. Some gains in the Japanese yen. This linked to the weaker Chinese yuan as a flight to quality bid comes into the yen. So of all of the major currencies that we are trading, it looks like the dollar will probably be the leader to the upside. And this is a long-term outlook. Now, moving over to the interest rate futures markets, some pressure in the overnight trade as commodity prices tending to firm. However, now, more recently, energy prices under some pressure. That seems to be one of the reasons why the bonds have come back to nearly unchanged on the day. Also, if we are right in thinking that the global interest rate environment will remain very accommodative, rates are likely to stay low, that should be a supportive influence longer term to the 30-year bonds. So, once again, good trading, everyone, and remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.